Welcome back, and it is talking technical time. And can you believe it? We warned about these markets for quite a while, and I was nervous every time that I warned because I knew that a lot of young investors will just pile into the market and they will ignore everything and they will just say, "Listen, nothing can go wrong." They were just chasing momentum day after day, and that is the big problem with the market. Tend to believe that it can never reverse, and the day when it reverses, you are usually involved in the market and you've got the wrong share, and then suddenly you lose a lot of money. And then I know there's a lot of fundamentalists that say, let's you just buy the market or buy an instrument and just hold on. And I want to show a chart, and I want to kick off with this chart. And Sash is asking about this chart. Sash, you were talking about Bitcoin, and remember, Bitcoin was that instrument that everybody just loved. I mean, nothing could go wrong. The instrument just went higher and higher, and you just came in and you just buy it. And I heard that a lot. You just buy it and you just hold on to Bitcoin, and you will be a rich person. So, well, let's have a look at Bitcoin. And what do I see here? I see this is a weekly chart, of course, and this, of course, is a 40-week moving average. I just want to make sure, yes, that is, and it is a weekly chart. And what I do not like about the chart is the following. And I've warned about this before, and of course, a lot of viewers will just say, "Ach, nee, wat Frans, you may be completely off the charts." There's an ugly double top forming, and I just first want to show you, there's the top, there's another top, and this was the big line. I'm going to show you now where this double top actually comes into play. This line that you see here, that is the support line. And that support line was quite a strong support, and that was at 37,621. I can remember I made a joke above 65,000 that maybe people talking somewhere it's going to 100,000, but this was that important level. But where's this double top? Now, I know I'm going to call it an irregular double top, because the reason why I'm saying that, and I'm going to show you now, this is a little bit of an irregular double top because this high is a little bit higher than that one. So it's not 100% double top. What it does tell us, every time that the instrument got to around this 58, 59 level, there were some sellers. And I can remember when it was close to the 60,000 levels, you could see on all social platforms, that's the time to buy Bitcoin. It's the best instrument. And what happened? It started to sell off there. Now, this ugly double top is on the brink of breaking to the downside. That important level is 31,600. Now, if 31,600 turns into a resistance, then we will have a big problem with Bitcoin. Because if you look at Bitcoin, and if I extend this line, I just want to show you where it can go to. And I know the whole world will say to me, "Frans, that cannot happen. Bitcoin is a brilliant investment." That can bring Bitcoin all the way down to $6,000. Now, I know some people bought it way below 6,000. Yes, of course. I also know of some people that bought it close to 60,000. There's a massive difference to see your investment going from 60,000 to 6,000. So just keep that in your mind. If it remains below 31,600, be very careful on Bitcoin. I will only get positive if this 40-week moving average, there you are, that 40-week moving average is sitting at 46,333. Only above that, I'll get positive. Otherwise, unfortunately, for me, this is a negative chart at the moment. Neil is asking about Goldman Sachs. Now, remember, Goldman Sachs is one of those banks in the world. I mean, it's an investment bank. It's listed on the New York Stock Exchange, and many investors love this. And I'm just a little bit worried, and that's why I'm looking at this chart, and I'm seeing what I don't like. I see this rounding. Now, a rounding top usually, you get a rounding bottom as well, but that is positive. A rounding top tells you that the share is losing momentum, and this is exactly what we're seeing here. Look what happened. There was the high in August 21. It was around $419. Since then, that's a lower high. There's another lower high, and all the way it's a lower high. Usually what happens when lower highs continue, then eventually you get an ugly sell-off, and then you see a waterfall formation. But at the moment, that's not happening. What is happening is that slowly but surely the share is losing momentum. So I will only say, and I don't know if he's a trader or an investor. For traders, I think the first sign of strength, there you are, will be, there's the level, will be above $316, above 316, that will be my first sign of strength. And where will be my stop loss for a trader? That will be 304. And yes, it can go back to 319, 325, and even at 346. And there's some other lesson that maybe you can just take note of. When we are in a bear market, and we are in a bear market now, especially with Goldman Sachs, what you do find is, if you are in a bear market, you get these beautiful relief rallies. And this is what's happening here. There was a bear market in 2020. So what you see is, it sells off, you see these sharp rallies, and then it sells off, sharp rallies, and until it finds its feet. There it was a beautiful consolidation around the 40-week moving average. Then it started to rally. So be careful in a share that you've got maybe, and there is a bear market. We're not getting a bear market, our market. The S&Ps are down about 16%, so they're also not in a bear market. In a bear market, you get these beautiful rallies. I mean, that's from 342 to 369 in a matter of 2 weeks. There you are, from 326 to around 348. It just shows you that in those rallies, some people actually lock in some profit. So yes, if you are seeing a share with lower highs, look at for this big spikes and then profit on that. Freddie is asking about Capitec. Now, well, Capitec is one of the banks in South Africa. In actual fact, I heard the other day that they're now the biggest bank. Maybe that's correct. I don't know. But Capitec is a stern performer. And of course, they involved with a lot of the SASSA card holders. They do a lot of payments there. They must have a beautiful system. What worries me is this, and I want to show you. If I use that little line there, that is the trend line. That trend line keeps Capitec going up. Every time that it got to this trend line, it bounced off there. That's a weekly chart, of course. 40-week moving average is exactly at 200 Rand, 2,000 Rand, and there you are. And we on the brink of breaking this trend line. Now, this trend line is intact till middle June 2020. Since then, it was an outgoing chart, nothing went wrong, and everything was just happy. But what I do see, I also see a ascending channel. Now, an ascending channel for me usually is a warning formation. Now, a warning formation is sometimes a formation that a lot of people just ignore. And I've learned from an old friend of mine that's been involved with technical analysis for many years. And he always mentioned something to me. He said to me, Frans, if you do see a chart like a Capitec or anything, you will see that sometimes it takes 2, 3, 4, 5 times before it breaks a support line. The day when it breaks that line, it's usually a vicious move. So we are on 2,010 Rand here on Capitec. We need to bounce off here. If we don't bounce off there and it breaks down, where can it go to? I mean, there's your target. There's the top of the ascending channel. I just want to extend it for you. And I mean, a lot of investors will just say to me, Frans, but that's not true. We must just buy Capitec and hold it. We don't need to sell it in any way. I don't say you must sell it. The only thing the only thing I can say is, what is now wrong here? There you are. Let's use this one. If it breaks that line of 2,000 Rand, it can actually take the share all the way back to 1,550 Rand. That is about a 20% drop in the share price. So it just shows you, be careful. And I know people will say, but Frans, let's look at the long-term chart of this. And you will just say, you must just buy it and you must just hold it. That is also true. Imagine you buy at a 2.4 and suddenly the person says to you, don't worry, just hold it. This move to the downside, there's the strong support. That support sits at 1,460 Rand. So this share can maybe go from 2,400 to 1,460 Rand, and then you just hold on. You can maybe hold on for quite a long time. Just be careful of that. You were asking about Coca-Cola. Coca-Cola, I mean, the share price came all the way down to close to 37 in 2020, and it's moving slowly up to the upside. But what worries me nowadays is the following. Look at this. There's almost a symmetrical triangle. Now, I'm always nervous about a symmetrical triangle because it can either break to the upside or to the downside. But there you are. I mean, this is Coca-Cola. This is one of the top companies in the world. And I'm just a little bit nervous, Kelly. There's your 200-day moving average. It just broke below that now. That was sitting at 54. That's a negative for me because it's at 53.90. And on the other hand, this big support line is at 53.60. If it breaks below 53.60, it can easily go to 44.74. And I mean, if you believe that it can go up above 56.24, it can go to 63.72. But I will use this 40-week moving average as my stop loss. Just be a little bit careful. I always say, if these big, strong companies starts to worry you on a chart, there's maybe something in the economy going and you don't even know about it. You believe there's nothing wrong with the economy. You also believe there's nothing wrong with your share price or the share. If these big charts like the Coca-Colas of the world and the Goldman Sachs and Capitec, if they start to worry, there's maybe something on the go. Well, we're out of time. Visit our website, www.fransdeklerk.com, for more info, and we will chat again.